RKLB Lab blasted higher today. Shares of RKLB Lab, symbol RKLB, were up almost 5% today on heavy volume. Does that mean that RKLB Lab shares could continue heading into space, or may RKLB Lab come back down to Earth? We'll consider these questions in today's Equity Empire Chart Analysis session. My name is John McHugh. I'm a former Wall Street analyst, hedge fund manager, and independent trader for the better part of 20 years. Today, I'm going to be taking a look at two things in the RKLB Lab chart. What is the direction of the trend? And are there clues as to where the big money is stacked up trying to buy or trying to sell? So step one, let's assess the trend. And the way we'll do that is by looking for the two most recent highs and the two most recent lows. So from high to low, low to high, and then high to low, we'll notice is as they move from left to right, the highs are moving higher. And as they move from left to right, the lows are also moving higher. That's the definition of an uptrend. And RKLB Lab entered an uptrend yesterday and continued that uptrend today. Let's next take a look for support levels for either potential bounce trades or discounted entry prices for longer term positions. So we'll change the time frame to 1 hour candles, and we'll notice that there is a support level right here in the 23.56 to 22.78 price range. There's another support level just below that in the 21.98 to 21.60 price range. I'm going to combine the next two levels into one and call them one support level at the 21.26 to 20.21 price range. So three support levels. Let's go see if there are clues as to potential resistance in the RKLB Lab chart. And there is a clue right up here that there may be institutions waiting to sell patiently right up here in the 27.55 to 29.79 price range. So our game plan, whether looking for a bounce trade or simply looking for a lower price point for a long-term position, would be to do this. We take one of these support levels and place a buy limit order at the front of the level, in this case 23.56, have a protective stop just below that level, and we could set our target all the way in front of that meaningful resistance level in the 27.55 price range. That trade would give us a 4-to-1 reward to risk ratio, which would be an attractive professional level ratio to enter for either a bounce trade or for a discounted price for a longer term position. So the game plan would be this. If price continues to head higher, we simply would not get filled, but we wouldn't lose anything. Ideally, we would get a pullback to our support level and get filled at our entry price of 23.56. We're at a buy limit order, bounce off that level, and then continue to the next major resistance level in the 27.55 price range. And if price were to pull back and go right through that level, we would simply take a small loss. So this trade is constructed for every $100 worth of risk you would take, you would have potentially $400 worth of reward potential. And once again, that's the way pros set up their trades. Higher multiples of reward for minimal amounts of risk. So let's wrap up today's session. Hope you enjoyed the session. I'll be back each day this week with more chart analysis. In the meantime, wish you the best of luck in your trading and investing, and we'll see you soon.